welcome to this week's Dairy Café, Jasper's bi-weekly effort, but of course in a different week than you might have expected. But Jasper's bi-weekly effort to keep you updated on anything and everything that's happening within the dairy complex. Luckily for all of you, you're going to have Jasper, Vesper's own dairy analyst, walking you through the markets. And you're going to have his trusty sidekicks in the form of Seb and me, just firing off questions, seeing what's happening, trying to challenge Jasper, see if we can make him break out a little sweat by all of the hard questions that he's getting from us. But please join us in our efforts to drill Jasper by using the chat or the Q&A to ask any questions you have about dairy. And let's make this a nice and interactive episode. Jasper, what are you going to cover today?
A lot, I think. If you're really going to start rapid firing questions, no. What we're going to cover is a little bit of the latest market update regarding pricing. We have seen some movement, even though kind of the headlines didn't really change. We did see some underlying movements. So we'll talk a bit about butter. We'll talk a bit about cheese pricing, S&P and non-fat, and not to forget whey. I won't elaborate on that too much because I also want to talk about some production numbers that came out. And finally, something that we were supposed to talk about today and we will show is why butter and cheese markets are completely different to non-fat / skimmed this year. And kind of some of the underlying reasoning why it's different in 2026 than it was in 2025.
The fat versus protein battle. I can't wait for that.
Fat against protein.
Yeah, there's definitely plenty of articles coming out recently about the protein boom. So yeah, that's definitely something that plays a role. And actually, just to start with that, let's just kick it off with an update on that. I've been clicking on MPC 85 rather than WPC 85 for the first time in a while. Because I think it's good to mention that the protein boom, which used to be whey proteins primarily, have been going up for a while already. It's starting to find its way into milk proteins as well. We've seen, and that is since throughout April, that this price really started to skyrocket, and this the price has seen increases of 30%, in this case 25 compared to a month ago, and we've seen it increased for a little bit over a month already. So it is massive. The protein boom is expanding from whey proteins into milk proteins, into caseinate, into skim milk, into even non-dairy alternatives.
I was going to say this is the Dairy Cafe, but I'm pretty sure if you look at if it was the Protein Cafe, we'll see this all across the board.
Exactly, and it's really about and that's something I also learned over time. I mean, I'm not I'm not a nutritionist. I don't know other than my own consumption how certain things taste, how they work. But I've been told that even in whey or products listed as whey products, there can be some milk protein blended in. And that's currently what we're seeing. Anyone who has some opportunities to blend in other products is doing that. And it doesn't stop indeed at dairy. You can go for pea protein, soy protein, rice protein. I probably missed 20 others, but I'm 100% sure that there's more.
For sure, there is more. I think the consumers, though still are purchasing mostly just your regular whey.
Yeah, and you're hearing this from a dairy analyst that the pea protein stuff. I think I'm yet to be persuaded by the taste. Yeah. Maybe the price will.
We got the first question already, and maybe as we're on the topic, and it's a question that you will not have a data source to show us for, Jasper. So it's probably what you've been hearing in the market. The question is, with the additional price growth that we see in the MPC 85 market, how much free MPC 85 supply is still available on the market?
If we're talking for Q2, none. So this is flying off the shelves massively, and the problem a little bit is I assume we're talking about Europe, but it's kind of similar in the US, in Europe, and also in New Zealand. MPC is a much smaller market than WPC is. WPC is produced in much higher quantities than MPC is, but that means that if some of this demand starts to shift, the protein market for MPC also skyrockets the way that it has.
Like, in terms of price, you mean?
Yeah. So like the price skyrockets, not because like there's a massive amount of stock available that consumers can jump in on. It's really limited. And for Q2, it already seems to be sold out. Q3 pricing is really around the levels that we're currently seeing. And I'll pull up, in this case, we have US MPC at $15 a ton, for $15,000 a ton. If I look at whey protein prices, it's $27,500 a ton. The price difference is massive. So anyone who has the opportunity will do that. If not, they've already done it. And that means that, well, whatever stock was there has been drying up real quickly.
Yeah.
I hope that answers your
Well done.
question.
Yeah, no, I think it answered. It's a very clear question. The reason why it went up that much is because there isn't any supply. Probably more supply coming by.
Exactly.
Yeah.
And that's definitely something that we don't really anticipate on changing anytime soon, because the protein boom really needs to kind of diversify into all these different protein markets. And when all of the different protein markets also move up and all protein is very expensive, that's really when we start to see consumers switch. At the moment, they're all buying a lot of protein products. I think the next one in line is carbohydrates, if I'm correct. But there's so many different consumers that have been added, so many different products that are new, and that's all going to be diving into this protein space, and they still are. If you spent the last 2 years on R&D and trying to build your new protein-enriched product, you're not going to not launch it suddenly, because now the ingredient itself is very expensive.
Yeah, no, and it has become so mainstream that it is really everywhere.
Yeah,
that's why we're seeing this boom, as you call it.
Yeah,
I think it's a good description.
If you bridge that into, or bring that into skim milk powder, skim milk powder markets are also slightly more tight. We especially see, of course, that US pricing is still far above the rest. If we zoom in, and I'll go and look at the CME call numbers for that specifically. So here on the top left, we see the non-fat dry milk CME call price. It was trading around the highest level 2 weeks ago, 7th of May, just below $2.30. It has been falling a little bit, $2.21. Many had already believed that $2, or at least close to $2.30, was way too high. Yes, we've seen a shortage. We still see a shortage, but arbitrage between regions should solve that. It's seemingly starting to take place.
Yeah, so I think that's important to say, right? When you start importing stuff, there's a bit of a lag. It always takes a couple of months until it comes in, and then you start seeing a bit of an ease in price. We saw it with butter last year. We see it here as well with skims. I think that's an important one to mention.
Yeah, it's definitely something that was the fact that we didn't have enough non-fat dry milk shows that, especially on something like the CME spot call, which is really for like spot delivery.
Yeah,
there was a need for spot volumes, because people were supposed to deliver volumes that they didn't or weren't able to produce, or something went wrong. They didn't have it, so they had to go to this market to buy it above other, basically outbid other buyers for that limited volume on this marketplace, and really make sure that they have it. So that short supply is slowly going to be fixed. It's not something that turns off and on, but we know that there's been more milk powder production in California and the Midwest, because the seasonality definitely helps there. So hopefully, kind of at least for the ones buying milk powder, this should normalize. And I'll go back to the Dairy Café again.
Can I ask a question here, Jasper? Just challenge you again. Between non-fat or SMP, being, of course, a skim component user just like MPC, and WPC 80 also being a higher protein price, which is boomed, they both would affect the MPC price, the MPC 85 price that we've seen such an increase on. Where do you see the difference in effect? Is it more of the push coming from SMP, so the skim milk component becoming more valuable or expensive, or is it the people using WPC 80 now looking for an alternative and more demand shifting from there to MPC?
I won't give you the boring answer and say it's both. In the US, it's rather driven by non-fat dry milk. So what we see is in the US, people use a multiplier system a little bit more. They use it in cream, for example, the cream multiple to butter. The cream multiple from butter to cream. But in non-fat dry milk, you have a certain multiple to go to MPC 70, MPC 85, even to MPI 90. And those multiples also include certain production costs. So in the US, it's really rather driven by this sharp rise in non-fat dry milk. In Europe, it's rather driven by demand really moving from one product to the other. Some of it applies to both regions. So also in the US, because some demand fell from WPC 80 to MPC, that changed. And also in Europe, people do use the multiplier to see, okay, what can I produce? I can do A or B. Well, I would love to do MPC, but only if the price is right. So I apply the multiplier. So it is both, but Europe really about the market changing, in the US really about the multiplier change.
Yeah. As you were just saying, I think it also takes some time to be able to change your formula. You can't just change your WPC 80 to your MPCs with a night shift. So often it takes a few tests, and that, as we know, especially when you talk about those high proteins with a lot of different specifications, it takes a long time before you can actually, well, not a long time, but at least a couple months until you can actually make the switch.
Yep.
So I think that once we saw this price soar around the 20,000 that we've seen, definitely on the way there are lots. Most people that could switch started to talk internally, to their people to try to make the switch to that.
Yep.
And there's a quick question about a salmonella rumor in a large Californian dairy. Is there anything you've heard about that already, Jasper, or are you going to look into it?
I did read upon it quickly, but I didn't dive into the details. So I do owe them a bit of detail. I'll try to see if there's anything interesting, and I'll put it in the Dairy Vesper WhatsApp, just to make sure that people are up to date. But there are indeed some diseases. But we've had screwworm in New Mexico for a while. People have already been mentioning the possibility of FMD this year. So diseases are always around the corner.
Yeah, it keeps on coming back, and we saw it last year whenever there was blue tongue and everybody was very stressed about, and then we've never seen as much milk as we've had after this blue tongue. So sometimes it does lead to a lot of milk, and not a shortage.
Exactly. I will owe you an answer to that fact. I'll make sure to answer that later. One thing that's still the case for non-fat dry milk / SMP is global markets are far apart. I think another market where prices are quite far apart is actually butter. So we're looking at butter pricing. Green is Oceania, by far the most expensive. Blue, there's Europe, which is stuck in between. And yellow is the US butter, which is trading at a sharp discount. And essentially, this is also what we would like to talk about a bit more later. But the reason why they are actually moving much more in line with each other after being far apart is because we now are all dealing with a surplus. And that surplus needs to find a home. And I mean, I love a bit of butter, but I'm not going to consume 3 packages a week. So there's like a limit on local consumption. And it really, you start to compete for export markets. And whoever has the most pressure has to sell at the lowest price. And I think showing you this graph, I think we all know that the US has the most pressure and also has the butter that is least widely accepted around the world. Slightly lower fat percentage, white rather than yellow. We've been talking to some Kiwis and some Dutchies around the world. Maybe FICO, you prefer your Kerrygold in Chicago rather than some white butter. So it's really that determines how high a price can be. In the case of US butter, it has to trade at a discount.
Yeah. And in most
butter is what. Oh, sorry. Go ahead.
No, and in most it goes into industrial production. If you make not per se croissants, but if you make cakes or whatever, that's where you can use that butter quite easily. But indeed, you need to find a home for it, and it is 100% harder to find a home for that butter compared to the Irish one.
Yeah, and I think the butter argument about US butter, I think we've always seen it melt away the moment that the spread becomes big enough. There's people that are willing to stow away some of their preferences, or not people, of course, maybe, but if the spread becomes big enough, I'm keen to see. I think if you look at this chart, we've seen some really big spreads where we saw it definitely changing. I wonder how big the spread has to be for people to set aside their preferences. We got another question, Jasper. I think we really got the people going by saying we're going to drill you. I'll put it on the screen. And that's the question about S&P, and I assume S&P or non-fat in the US has been at such high rate in May 2026. And is it cross-subsidizing butter prices in the US in particular?
So that's 2 questions. 1, why is it this high? And 2 is there actually a reason, or is that part of the reason why butter can stay this low, if I'm correct?
Or is butter staying that low? Yeah, exactly. Is it subsidizing in terms of price, I suppose? One being very low, one very high.
That definitely helps. I mean, some of the things that we see is there's a class milk system in the US where class 1 is more for fresh products. Class 2 is like ice cream, some spoonable stuff, yogurt. Class 3 is, in this case, cheese and whey. And class 4 is butter and skim. And the price that can be paid for class 4 milk is determined based on the butterfat component and the milk protein component. And of course, if milk protein goes up the way it is, people can pay more for their class 4 milk. So more milk goes into class 4. They would love to make non-fat with it to make sure they use those higher prices, and that more milk actually also pushes down butter prices.
Yeah.
So at the same time, like the higher non-fat prices, it's pushes down butter prices even more than it should or normally would. It's not necessarily that those keep each other in balance, but to a certain degree, there is a bit of overlap, and they definitely influence each other.
Yeah.
Then what I wanted to show actually is the recent change. So even though we talked about, okay, markets have been up for protein, these whey proteins, milk proteins, S&P rather stable, but butter and cheese have been kind of flat.
Very flat. Very little liquidity as well.
Yeah, that also doesn't help. But one thing I wanted to show is that we do see some changes within the market. And I think the big thing this week has really been about milk intake. We've had French numbers, German numbers, New Zealand numbers coming out earlier yesterday, I believe. US numbers coming out tomorrow, at least for us in the evening. For FICO, it might be halfway throughout the day. Those numbers still look good, but not everywhere. So I think France is one of those examples where we definitely saw some, I would almost like to say concerns because the milk intake fell. But I think this is where we need to separate the discussion away, or at least separate into, yes, it's down. Like, we're not going to ignore the fact that it's below 2025. That's kind of what we've been expecting, that we're not going to keep up with the 2025 numbers all year. And 2026 has been really good so far. So it had to fall someday. That's taking place. In a normal situation, you would say, okay, that's kind of a more bullish signal. But still, we're really at high levels. We are above 2024 numbers. This weekly number has shown to be quite volatile. I mean, we still look at the January number, which is slightly lower, but over the weeks, you can see that sometimes it really corrects. The weather hasn't been very favorable in the last week, so it's been all over the place. I'm not very concerned by 1 week number. Why? Because we're still above 2024, but also partially because if we look at, and I have a lot of products listed here, for example, Germany, the numbers here are still up massively. So one region, of course, France, it matters, lower than the weeks before, still higher than 2024, and I predicted that will stay that way. But if Europe as a whole still produces so much milk, like, there's no reason for us to now say, okay, it's really getting tighter. One place where we do see a change a little bit, and I won't start with cream, but I will start with milk. The farm gate milk price isn't necessarily the most important one now, but we do see, click it away again, that milk is becoming more expensive. So yes, we do see that this peak of milk in Europe regarding supply is behind us. It's going to become slightly more tight, less available, and therefore slightly higher prices. But if we compare, well, this is 21 cents or 19 cents in Germany and the Netherlands compared to 42 cents, we're still well below that margin. And I think if we zoom out and actually include the Friesland Campina price, it's a really good indicator of, okay, are we in a shortage of milk or are we in a surplus of milk? And well, the large difference between spot and farm gate still shows me we're in a surplus.
Yeah, clearly. And I think that's what we mentioned as well, right? We, from last year onwards, there was, after 6 months in the year, that's when it kind of turned and we start seeing a lot more milk than we saw over the previous years. And so it was no surprise that we were going to start to see also red numbers this year. And I think that's that is to be expected. And if we're still in this new kind of generation of blue tongue, as we told last year, when the calving happening a bit later, you can still see a peak actually happening a few months later. So that's still to be taken into account.
Exactly. That's also what I want to show here. Like 2025, the second half of the year was amazing. And we expect that those numbers will also remain higher this year. They might not reach 2025 numbers. They might say slightly lower, but even that is a great milk intake.
Yeah, completely.
I think there's another question that came in that's good to cover now we're on this topic, Jasper. That is, if farm gate milk prices were to lower to 38, 39 euros per, what do you expect EU farmers to do? Do you expect them to keep investing? So does it stay strong? And I would like to add to that also, how long does it take for us to see this? So if the milk price goes down, how much is in quite instantaneous effect, or how much has the feed already been bought? Have investments therefore already been made? And does it take a long time for this to shift?
Well, It's a bit of a difficult one to answer because there's many different components to it. But I think one thing I would like to mention, and I'll go back up to the farm gate milk price. We did see 39 cents milk. Like we saw it in March, we saw it in Feb, and then we moved back up because some prices started increasing a little bit.
Yeah,
S&P
skim,
started to increase, really pushed up the protein component from the farm gate milk price. So like we've had this situation throughout Jan, Feb, March, and we've all seen the milk output in those months. It has been amazing. That was also because much of the feed was already bought in before. We've seen the closure of the Strait of Hormuz. Oil prices skyrocket. So yes, it is a slightly different situation now, but still we feel like roughly around 35 cents, 38 cents in the Netherlands, but 35 in the rest of Europe, which is 380 in this case for Europe per metric ton. That's where kind of that break-even point is. With the increased cost prices, it might be 385, 390, but it's not a massive difference just yet, especially because we're at the point in the year where a lot of cows go outside. In wintertime, this would be much more of an impact. Because of course even now cows eat additional, but in winter times they're rather inside and really fully focused on power feed. Now it's a bit of a mix. So we will see that milk output in H2 lower if we now really start to see this milk price drop below that level. But at the moment, especially because milk protein is doing this well, whey protein is doing quite good, cheese and butter are not really falling.
No,
I don't see a reason why milk
steady.
prices should really fall. I'm not saying that this is like the lowest that we've seen was 390 and is only going up from there, but because the protein component is doing that well, we might actually see that it's not going to fall down significantly. One thing I also wanted to show, and I see that we're running out of time quickly, is the milk solids production volumes that we saw for New Zealand. Those came in yesterday morning. I'll click away some numbers. So we are now receiving the numbers for April. It's towards the end of the 2025-2026 season. We will actually go back to show you the year-on-year changes because the 9.42% increase in milk solids in March was exceptional. We didn't anticipate that would stay. Still 6.93% is a milk surplus that's massive. And it really confirms that the 2025-2026 season is going to end on a very high note. We've already heard, even though El Nino has been kind of in the news a little bit, that there's a high potential of it arriving second half of this year. Fonterra is offering a lot of volumes on the GDT for the upcoming season already. They're not doing it now, but they're planning on doing that in the new milk season. So milk solids are up now. And it looks like the expectation is currently that the milk output is going to stay well in the months of July, August, September, and October when the new milk season starts.
Yeah, explosive down there.
Then I want to look at milk proteins. I think we've already talked a bit about this, but we promised our viewers, or at least the ones that subscribe to LinkedIn and wanted to see this, that we would dive a little bit into why butter and cheese markets are completely different than non-fat/skimmed throughout this year. And I think a large part of the answer lies in how export dependent these markets have become. As we all know, butter and cheese are much less export dependent than a market like non-fat dry milk in the US or S&P in Europe. We're really talking about, in this case, if we take the total demand for a random month, out of the 90,000 tons, only 3,000 tons was export. So that's like, it's less than 5%. And the other 95% comes from consumption. That's the case for cheese. That's the case for butter. For non-fat dry milk, we're talking about 50 to 60%. Also for S&P, we're talking about 50 to 60%. But here's the thing: if we look at the last, I think even 10 years would be a nice thing to look at. Always takes a bit longer to load. If we look at how exports have been rising, we see that there have never been this much exports of US butter as we've seen basically since prices fell significantly lower. And this is all really driven by that large milk surplus, the need to produce commodities with it, because you got to store that milk somewhere. You can't keep it fresh forever. Class 4 is a great way to store your milk, especially when the milk fat content is very high. Butter is a great way to do this. But what do you do? And exports are a way to keep stocks low, because ultimately, if you don't export and put everything into stocks, that's fine, but then your local price is going to plummet. even further than it already did. So
Yeah, and your cost increase, right? Like everybody says, you can stock. That costs money as well. And at some stage, that just people as well. At some stage, need cash.
Yeah.
And especially if you have farmers to pay, etc., you need to offload what you have in stock. So you can't just stock everything. So that's why export is a great way to offload products if you're really on a big surplus.
Yeah, and that's something that definitely hasn't really been the case. I think something that we looked into recently, for example, if you compare imports versus exports, the US used to be a net importer of butter. They, as you mentioned, the Kerrygold butter, etc. A lot of European or New Zealand brands that are being shipped into the US. But in recent months, they've become a net exporter of butter. It really confirms, okay, they are in need of more demand. They need to send it somewhere. And it seems like Mexico, Canada, they're all places that are happy to open up, sometimes even Europe, for their butter at very, very low prices.
Yeah. I mean, there was also the big peak there, and I remember why that was, why it was the case. That was just before we had the import tariffs of Trump.
Yep.
And Ireland just decided to, especially, Kerrygold butter was just had to be exported in urgency before that went into place.
Yeah, exactly, and that's definitely something.
That's a bit of an anomaly as well. Important to mention it here.
And those didn't go into stocks either.
No, they were
straight into retail. And also the same thing. I mean, we talked about cheese. For cheese, it's been the same thing. Global demand for cheese has been rising. We know that new countries, also in China, for example, they've been starting to consume more and more cheese.
Mm-hmm.
And over the past 10 years, we're really talking about an export from 25,000 tons now to 63.
Wow.
So in 10 years, it's more than doubled. And this is really, it's starting to kind of, especially with all the milk growth in the US and temporary milk growth in Europe, cheese is being a bigger thing, butter is being a bigger thing. They need to start exporting it. And that's exactly what we're seeing. All that product expansion, local consumption can only absorb so much.
Mm-hmm.
And exports are really the only way to keep your stocks from overflowing. And keeping your stocks from overflowing is the only way to really put a kind of a bit of support under some prices.
And if you look at consumption change in the same period, so in the 16 compared to now, how has that changed? If you hover over it, you'll see it in the same drop down tooltip.
Oh yeah, of course. I'll keep both open. So in essence, here exports used to be, or at least the latest data available, exports are roughly 10%, while consumption is around the other 90%. But back then, it seemed to be more like 95% is local consumption, only 5% was export. So it's really kind of similar to what we saw with butter. People consume more cheese, also in the Western world. Population growth also definitely helps. So like there's a lot of additional things that also make sure that next to all the protein that we've been consuming, we consume more cheese and more butter. But exports are becoming vital. Temporarily for the Europe, because we're having a lot more milk now. For the US, it seems like more of a structural thing.
Yeah, but at the same time, I feel like that's what's also interesting here in Europe. It doesn't feel like exports, especially in butter, has been extremely strong, or consumption, at least for butter, has been extremely strong. So you wonder, with that much milk being produced, where is it going?
Yep.
Are we stocking a lot? And if we are, that probably means that there has to be, at some stage, it has to come back into the market at some stage.
Yep.
So I'm very intrigued to see the coming months, especially June, July, especially if a few of those, dairy companies need the cash. Are they going to start putting a bit more products on the market? Because for the moment, as we said, it's very illiquid. There isn't much happening, and that's completely to the contrary of what we're seeing on the protein side of things. What we just explained, it's very active, a lot of deals going, a lot of products moving hands. Not the case in not the case on the fats side.
Nope.
I think
sorry, go ahead.
We're almost at the end of our episode. Is there any one last thing you want to show, Jasper?
Well, there's 100 things I'd like to show, but in this case, I think the main thing that I kind of want to highlight, not necessarily show, is we're now at a moment in time where milk production numbers might be changing a little bit. They might not look as bright and amazing as they did before, but I believe they're still good. If they're beating 2024 numbers, we're really still looking good. I think this is also a time where you have to start taking a look at what do I compare or benchmark myself against. If you use 2025, then for production, for example, your first half year is going to be a surplus. Second half year is going to be a deficit. But know that in advance. Maybe use the 5-year average if you want to, or compare it against a more normal year like 2024 or even 2023.
Good tip.
So some good advice as a takeaway from this. We have some questions still open, but we'll leave that and we'll try to follow up individually wherever we can, and we haven't covered it yet, something we've already covered. Jasper, I want to thank you once again for sharing all of this with us. Sebi, for being there, I guess. Thank you so much. Great to have you there again. Nice new shirt you got. If you have any questions, please feel free to reach out. We'd love to hear from you as well. And we'd love to see you back here in 2 weeks' time.
Thanks, everybody.
Thanks, everyone.